Hey guys, what is up? Faz here. In this video, I will teach you ICT's market maker model silver bullet trading strategy. He revealed this strategy in 2021 mentorship, and this is actually really powerful. So before we move to the silver bullet section of the market maker model, we need to understand what exactly is a market maker model, right? So let me draw this out real quick. Let me make it a high time frame PD array. Okay, you need to understand this or else this will not work. Okay, so we mark out a high time frame PD array and we wait for price to come back into our high time frame PD array. Once price does that, we don't want to look at anything else, but we want to look at the original consolidation. We need to identify a consolidation phase before, the consolidation phase that occurred before price came into, the PD array. So over here, you can see we have a consolidation phase right here. So in a market maker model, you will have a consolidation phase, expansion, accumulation phase 1, expansion, accumulation phase 2 into your high time frame PD array. Now, the second accumulation phase, which is right here, is not necessary. You can have the first accumulation phase and price can directly go into your high time frame PD array. I'm going to teach you a market maker silver bullet method that works with other strategies as well in this video. But first off, we need to learn how to use this method with the market maker model. So now once price comes into your PD array, you have to look for a smart money reversal, which is basically market structure shift. So over here, we break this low. That is our market structure shift. And if we look at it here, that would be our low risk entry. We are not going to enter off this level. I'm going to teach you the silver bullet method that is going to guarantee 80 or 90% chance that price will take out the low of this consolidation. So keep watching. Apologies for that. So you have a market structure shift, low risk entry, then you have another break of structure right here. Now this is distribution phase 1, and this is going to be distribution phase 2. So distribution phase 1, distribution phase 2. We want to enter here, okay? We want to enter during the second distribution phase. Now that is going to increase your win rate by 80 to 90%, but there's a catch. Now this is like the whole strategy, all right? You have to first off identify the draw on liquidity. So in this case, these equal lows or a consolidation phase, the low of the consolidation phase is your draw on liquidity. Now, sometimes what can happen is you will get a market structure shift and price will just keep on going up. In order to avoid that, what you can do here is use your Fibonacci tool. Use the Fibonacci from the top of the last high to the low of the consolidation phase, like that, okay? So we use the Fibonacci. Let me remove this. We use the Fibonacci, right? From the top of the high till the low of the consolidation phase or your draw on liquidity. Now, if price hits the 0.5% of the range, right? Then there's 80 to 90% chance that price will now take out the low or your draw on liquidity. So once it does that, first off, remember, we're going to enter on the second distribution phase. So we have a distribution phase 1, and then this is our second distribution phase. We want to enter here. But how do we know that price is going to go here? We have to wait for price to touch the 0.5 level. It can actually touch over here, right? Once it does that, you just wait for second distribution entry, or it may not touch it and you will get another break of structure and that touches the 0.5 level or goes below it. It can go below it. Then you can take your entry from either the break block, an auto block, or the fair value gap. And there is like 80 to 90% chance that price will take out these lows. This is literally, guys, the holy grail. ICT said it himself, and this works a lot. Like, I've been using this with other methods. The thing is that I use a lot of strategies, right? I don't trade one single strategy. I used to do that back in 2021, but since I'm like a funded trader at the moment, like I'm managing 4 accounts at the moment, whatever setup is presented to me, I trade it. And this setup is one of my most profitable setups at the moment. So yeah, that's about it, guys. I'll give you some examples, and this is gonna clear a lot of stuff. Now, how do we actually use it without actually, like looking at the market maker model or whatever? Now, remember, we have to enter on the second distribution level. And now if I invert the chart like that, it's gonna be same, just flipped. So we will have original consolidation, right? Then we're gonna have distribution phase 1, distribution phase 2 into your higher time frame PD array. Afterwards, you would be looking for a market structure shift. That is gonna be our accumulation phase 1. Then we will enter on the accumulation phase 2, which is gonna be here. We're gonna have a market structure shift, and then a break of structure that goes above the 0.5 level of the range from your draw on liquidity to the last low that was formed before market structure shift. And we're gonna enter here if priced at the 0.5 level, and that is gonna go up there 80 to 90% of the time. Now let's reinvert the chart and let's delete everything here. Now, if you have been my subscriber for a long time, I have taught you guys about external and internal liquidity, right? So what we can do is we can use this method, exact method, with that strategy. So let's say we take out external liquidity over here, right? And we have a fair value gap that resides here. That is our internal liquidity, right? So let's say that we looked at this on a daily time frame. Now we will drop down to 1 hour time frame once the external liquidity on the daily time frame is taken. Now on the 1 hour time frame, we would look for a market structure shift. Now this is our draw on liquidity, which is the internal liquidity. So what we will do is we will use our fib tool from the draw on liquidity to the last high that was formed before market structure shift. Now, if price reaches the 0.5 level, we can then look for second distribution entry. So it's gonna look something like this. We're gonna wait for a break of structure, right? And we will simply take our entry, boom, boom, like that. Absolutely easy, guys, and it works wonders. So yeah, you can use this method with external internal liquidity method as well. Now let me give you guys some examples and then I will end the video. All right, guys, so here is example number 1, and in this example you can see this is our high time frame PD array. This is a daily swing high, and we took that out. So once we took that out, I dropped down to 1 hour time frame. Now on the 1 hour time frame, what I can see is a clean market maker model in play. So over here, you can see we have a clean consolidation phase. Then we have the accumulation phase 1, maybe an accumulation phase 2 here. And then we also have accumulation phase 3. So yeah, that even works better. Now look at it here. What do you see? We took out the PD array, we went into PD. So basically a liquidity point is also called PD array if you're confused. So we get a market structure shift here by taking out this low, right? That is our shift in market structure. We went into this fair value gap. That is our low risk entry. Afterwards, what you can see is that we have this, low created. Sorry, this low created and this high created here. And we also get a break of structure. So now we have the distribution phase 1, and now we are into a distribution phase 2 around here. But to confirm that price is going to take out this low, what we were doing is use our Fibonacci from the high of the from the last high to the draw on liquidity level, which is going to be this. And over here, you can see with this candle, we touched the 0.5 level. Now, once the line touched that, with the benefit of hindsight, you can see we have this mitigation block. And after candle close, the price ticked into this mitigation block, right? You can use different entry models, right? I don't have a specific model, entry model for this method. Whatever is presented to you, just take your entry, because once price touches the 0.5 level, it will go to the the draw on liquidity level like in no time. Like it will just rush towards that level. All right. So with the benefit of hindsight, of course, you can see we also have this fair value gap, but then the candle closed here. So now in this example, I don't have a perfect entry because I don't want to be like showing you that you're going to always get perfect entry. But in a rare case scenario like this, you can see we had a mitigation block and that price touched the candle, the box here, and we just rushed down and the take profit level was hit. Let me give you guys a couple of more examples. All right, guys, so here is example number 2. I'm looking at AUDCAD. So once again, we took out a swing high on the daily time frame. Once that happened over here, I dropped down to 1 hour time frame. Now over here, you can see we have relative equal lows here. That this low is a draw on liquidity, right? It doesn't have to always be like a perfect consolidation phase or a perfect equal lows and highs. You can see that we have this low here. And also, this is one of my ABC trading strategies. I have taught this on channel. The thing is, you need to have a draw on liquidity. So over here, we have a sort of consolidation phase here, right? We have this low, and then we had this low that didn't take out this low. So this is our liquidity point. Afterwards, what we did is we took out this high on the daily time frame. Then we have a shift in the market structure over here. And you can see we have our first entry, which is going to be low risk sell, but we're not going to take this. But then you can see we have a break of structure around here. Now, once this does that, we want to be looking for opportunities, but not yet. We want to use our Fibonacci from the high to the low. And you can see 0.5, this candle touches that level, right? So now what we want to do is we can take our entry from whatever is presented to us. So with the benefit of hindsight, of course, you can see we have this auto block here, and we also have this auto block here, and we have this wick. So we can also use the constant encroachment of this wick, 0.5 level. But I would honestly take my entry from this auto block, and you can see that it just rushes through that level like that. Let me give you guys another example. All right, guys, so here is the last example. I'm looking at EURGBP, and of course, again, I'm on the daily time frame, and we took out this PD array around here. So let's go drop down to 1 hour time frame and study what happened. So right as I drop down to 1 hour, I can like literally identify the market maker model. So we have the original consolidation, right? We have the distribution phase 1, then we got the distribution phase 2. We also got the distribution phase 3 from down there. Now, once the high time frame PD array was hit, this is our draw on liquidity, the high of the consolidation, like the actual target. But how do we know that price is gonna actually hit this target? We have to look for that Fibonacci rule. So over here, what you can see, we took out this level. Now we simply wait for a shift in the market structure. That happens right there. That is the first step. Then we have the accumulation phase 1, right? Boom, like that. Now we want to use our Fibonacci from the draw on liquidity to the last low. And over here, if I extend it out like that, you can see we touched the 0.5 level, and we are also in the second accumulation phase. So that is when we're going to enter from here. So what I see from here onwards is once we had a break of structure, right, we have this auto block. So this is going to be your silver bullet entry, right? Whatever PD array that you see, you just enter off that level. So over here, you can see we had this auto block. This was when we got the entry, and look at price just rushing through that, like your draw on liquidity. It works like, guys, it's like actually works like 80 to 90% of the time. I know ICT said it himself, but I actually tested it. Whatever I share on the channel, I test it, I forward test it, I use it on my real accounts. And once I know that this thing actually works, then I put it out on my YouTube channel or in my course or mentorship. And you can see beautiful trade right off the bat, original consolidation hit. Thank you guys so much for watching. I'll see you guys in the next video. Goodbye. Mwah.